All right, ladies and gentlemen, welcome back to another one. This is the TD Markets Academy trading room on a Thursday afternoon, just after 2 p.m. All right, excited to have you guys back. Before we get started, remember the information discussed in the session is not advice. All right, very important that you note the following: it is not advice, it is just our point of view and our opinion on how the markets will react. All right, excited to be back. Thank you so much for joining us for the NFP session yesterday. All right, we had a very good informative NFP session yesterday, and you guys made profits with gold. The Euro USD fell later on, but nonetheless, it was a good one. It was a good one. All right. So yeah, we're excited about the next CPI session, which is tomorrow. So do join us on our CPI live stream that is tomorrow at 3 p.m. live on YouTube. All right. And yeah, the details are on the chat right now. If you guys want to sign up and start your trading journey today, you can open up an account, sign up for an account at tdmarkets.com. And then if you guys want or are looking for further assistance, you can contact us on the following or the provided contact details. All right. So let's get right into it. It is a Thursday, the aftermath of the NFP. When we spoke on Tuesday, we said, should there be any changes on the market movements, we will discuss those on a Thursday. All right. So we're going to talk about that, the aftermath of the NFP session. And I hope my sound is good. All right. I hope there are no issues with the sound. Hope my sound is good. So let's give it just a few more seconds, waiting for the slow pokes to jump in, and we are going to get started. All right. Thank you for the reply, Tato. I can see you. I can see you, Tato, 2 times. I can see you there. I'm glad the sound is good. All right. So let's get the session started, guys. All right. We are looking at the charts. We are looking at the movements. Suleiman Abrahams, welcome back. Thank you for joining us. So, like I said, we are looking at the charts. All right. So we're gonna start with the dollar index to see if there are any changes on the DXY. All right. As you guys know, the dollar index measures the performance of the dollar across a basket of currencies. Right. So what you're seeing right now, it measures the performance of the dollar, US dollar, across a basket of currencies. So nothing has changed, guys. Right. The dollar is still a bit weak, but for the past 2 days, we've had some sort of a consolidation here, right? Some sort of a consolidation here from the dollar. That's why right now you are seeing gold is ranging. You are seeing a bit of a range on Euro USD, I think, and basically pullbacks, right? We're seeing pullbacks in favor of the dollar at the moment as a result of the DXY. So if you take a look at the current price action, we are trading within a descending structure, okay? So nothing has changed from the performance of the dollar, on the performance of the dollar. So what we're seeing right now is just the market correcting itself, right? Just the market correcting itself within the continuation of the trend, all right? So this is where the continuation happened. The continuation happened right here, just like it happened there as well. So you have your lower highs, right? You've got your lower highs, price fell. We have another lower high. So we're anticipating price to continue dropping, all right? So we see the market pushing down to at least 95 point, let's say 95.9, 95.9. That's where we see DXY dropping down to. And if it breaks below that, then we're going to continue pushing towards the downside, right? This chart right now, this price action right now, it's breaking below significant levels, all right? Like right now, it is testing this zone, right? We are seeing a retest there, a lower high. We're getting a lower high. So that's very encouraging, right? It is testing that zone. So from there, we're anticipating one more push towards the downside. What we can also do is just to have a look at this support trend line, right? A break below this, then we're anticipating price to drop. Although this lower high here is more than enough. You see how it is? So the DXY right now, nothing has changed. It is still bearish, right? It is still bearish. Nothing has changed. And so we are sticking to the same script, guys. Sticking to the same script. Nothing has changed. We are looking at a weaker dollar. Tomorrow we've got inflation data that's coming out of the US. So let's see if that's going to change our view at the moment. But with what we see right now, the dollar is weak, right? Let me see. I see there's a question there. Is this the daily thing? I'd love for it to be still learning practical. Yeah, no. We do this every Tuesdays and Thursdays. So we've got trading rooms. This one every Tuesdays and Thursdays at 2. Right? This is what we do. But now in the morning at 9 a.m., we have the opening bell. Opening bell is market analysis, morning market commentary, right? It is streaming live on YouTube at 9 a.m. That is every day, Mondays to Fridays. But these ones, the trading room, only streams live on Tuesdays and Thursdays. You see how it is? So yeah, so the schedule will be on the chat shortly. There we go. Yeah, there's the schedule there. And also maybe if you can add in the opening bell there, opening bell would also be nice as well, right? There we go. For the opening bell, Mondays to Fridays at 9. So there we have it, guys. If you are new, you're joining us for the first time, that is our YouTube schedule. Also, not forgetting the education. We do have some trading education for you, right? You want to open an account, you want to learn the markets, you want to learn how to navigate through the markets. We do have some education for you. All you need is just to open an account and send us an email to care@tdmarkets.com, or one of our account managers will get in touch with you. But you need an account, right? If you do have an account, get in touch with us, care@tdmarkets.com, and we will sort you out with our education sessions, right? The schedule will be on the chat shortly. All right, now coming back to the charts, guys, right? So let's look at what the dollar is doing, right? In fact, maybe you guys can tell me what you want me to analyze, right? I'm going to clear my charts. So maybe do let me know, guys, where should we start? What should we analyze? Should you look at gold? Do an update on gold? Let's see. Let's start with gold. Right, let us start with gold. Okay, there we go. So gold has not changed, okay, but it has reached a high. All right, so let me show you the structure on gold. So this is where gold is right now. It has reached this high right there, right? So we can see that the market is reacting to that structure there, right? In fact, let me just draw this across. We can see the market at the moment is reacting to the structure. Man, should the market break above the structure, then we're likely gonna see gold headed back to, let me show you this, right? This is where gold is right now. Should the market break the structure, then we're likely gonna see gold heading back to first this zone, right? There is a possible supply zone around, let's say around, yeah, just around this price, right? I mean, it's a zone, so maybe let me do this. Yeah, a break above here, we're seeing gold pushing back to the zone, right? This zone is a possible supply zone. It's a possible supply zone. I'm using the word possible because price can break and go up according to the daily or to the overall structure, right? So what we can see at the moment here, we can see price. I mean, you guys can see that the market is not really moving, right? It is just consolidating here. Nothing much is happening here. We just have a consolidation, and we might see one more push towards the downside before we eventually continue towards the upside. We might see this, right? We might see something like this. So if it doesn't break right away, we might see one more push down to give us a higher low maybe, and then a move towards the upside. So if you're holding long positions, if you've been holding long positions, just be aware of what's happening here, right? We've got looks like a very strong structure. um, that has held price. But what I love about this is, even though that is the case, it continues to give us higher lows, right? It continues to give us higher lows. So since we have the previous lows here and a higher low, we might be getting another one, right? That's in fact, I mean, looking at the trend line, using it as a guide, we might be getting another one here. So if we make a push down, then you're gonna keep an eye on what's gonna happen there, right? But it doesn't matter whether we're gonna go down first or what, but we still remain bullish, all right? So that is an update on the dollar. Again, we've got CPI tomorrow. So CPI, I mean, we know how CPI moves, right? Inflation data, one of the key indicators within the economy. So if it changes this view, then we're going to come back and just talk about the changes, all right? So in terms of the structure, gold is still very much bullish, all right? The all-time high was up there. The all-time high was up there, all right? So we could potentially visit that zone, but I think there's going to be some fighting that's going to happen here, right? There's going to be some fighting that could happen here. So let's see what's going to happen, right? Let's give it a day or two, and then we will come back, right? Let's give it a day or two, and then we'll come back. So gold, this is how we're looking with gold, all right? Going through the chat, Euro USD. Let's have a look at Euro USD, right? Euro USD, the last time I saw it, I think it was correcting. If I'm not mistaken, it was correcting. All right, let me see. Yeah, there we go. Aha, brilliant. So this is what we have on Euro USD, right? Very simple. We can see that the structure is bullish. We can all see that, right? So what we want to do is to follow the structure. So what you will notice here is price, in fact, when it broke, so there was a break of this high, of this structure, give us a new structure, and then there was a break of this structure to give us a new structure, right? So now where's the new structure? Here it is, right there. This is the new structure that formed, right? Now notice what the market did. The market gave us an impulse wave towards the upside, came back down, retracing back to that 61.8. This is where we have our higher low on 61.8, right? So definitely there's a continuation now. There's a continuation forming. So 61.8 held price. Price now is moving up. Now look what's happening again. If I zoom in, right? If I zoom in, look what's happening again. So we have a new high that formed, right? We've got a new high that formed, which is right here. So if you take your Fibonacci again on this impulse wave like this, you will notice that the market is repeating what it did previously by giving us another higher low on that 61.8. So let me go to the lower time frame so we can get a better view of this. So this is what I'm talking about. So the market broke the structure, right? Rejected the structure down here and broke the structure towards the upside. So now it is retraced to that 61.8. So there's definitely some interest and activity around this zone, right? So this is a simple trend continuation here, where from here we are looking for a continuation towards the upside, possibly back to the zone, back to this area, back to that area, right? So since we are getting a higher low here, and since we got a higher low, so these higher lows are very important, guys. Never underestimate a higher low, right? As much as we want price to form higher highs, but never underestimate a higher low, because if you read in between the lines, you will definitely know you will understand the principle of price and definitely have an upper, like an edge in the market. So you've got these two higher lows. So where are we going from here? Anticipating price to resume pushing towards the upside and possibly reach this zone here. Reach this zone. So Euro USD definitely still looks bullish. Still looks bullish, definitely. All right. And then if you take a look at USD JPY, it has gone back down to the low, and then from that low, the first setup is done. I'm gonna show you the setup I'm talking about. All right. So this is where the market is right now. oh, it hasn't really tapped this low. Right, let's do this, right? So according to this price action, we should be coming back down to this low. But let me show you where price is coming from. So price is coming from this high. All right, from that high, we can see that there was a rejection, that's a strong resistance from there. And then the market fell, right? The market fell to break this structure, to give us new structure. And then the higher low that formed, the market went back to tap this zone again. Right? So how would you have known if this is a possibility? Well, this lower low, this low here would have given you that scenario. This low would have told you that should we get a lower high, we're going to resume back down. We're going to resume back down, right? But yeah, so looking at this setup here, so this setup, the market should be coming back down. Not should, but according to the price action, the market should be coming back down to this low. So this setup is about to complete, right? It's about to complete. And then from this point on, because it's a previous low, there's a possibility price will do this or will do this. You see how it is? From this lower high that formed there was a higher probability that price is going to fall, okay? So when it falls, it's coming back down to this low. Now from this low, right? From this low, we may get a double bottom. We may get something like this. From this low, kind of like a double bottom, and price goes up. You see that? Or we may get just a continuation down, where price went down, give us a retest, or not a retest, but a correction, and then one more push down. So if it rejects, then it's a double bottom. If not, it will break structure. So these are the two possibilities here, right? So if you're already holding a sell on this, then you must be aware of this low. Anything can happen on that low, right? This is what we call a cycle. This is what we call a cycle. All right. So Euro USD, USD JPY, there you have it, guys. Clean, smooth price action. We're sticking to the same script. If you guys want to learn more about what we do and how we do it, we do have the academy, the TD Markets Academy, on the chat right now. The details are on the chat right now, right? So if you're sitting there and in awe, on of what we do and how we do it, I mean, you guys can refer back to the previous sessions and then track the performance. All right. If you guys want to learn more, the details are on the chat right now. We've got some education for you guys in the morning and in the afternoon, evening, different levels, beginner, intermediary, and advanced level. And yeah, we're hoping to see you guys there. All right. AUD NZD. That one, I'm looking for sells on AUD NZD, and I'll explain why. All right. I'll explain why I'm looking for sells on AUD NZD. Right. So this is from a pure structure point of view, right? We are combining it with market waves. So if you look at the monthly time frame, right? Let's try and make sense of what's happening on the monthly time frame. Let's try and make sense. So obviously price rejected this zone, right? Rejected this zone and has been pushing up, right? So what we can say is, we can say that this is our current structure towards the upside, bigger structure towards the upside, right? So now, as price was going up, it broke this top. Notice that top, it formed in 2015. Now notice the period, notice the time, right? Because time is very important also with price. So this high is a 2015 high. The market broke that high. At 2015 high, the market broke it, right? Obviously, this is a very strong impulsive wave towards the upside. Let me zoom in. A very strong impulsive wave. So we've broken a very significant high or resistance. Now, the market at the moment, it's most likely going to create a high. So we have this break, right? Now, we're in no man's land at the moment. Momentum is still bullish. So now, with a scenario like this, you would want price to correct first for you to catch the continuation. Because the continuation, look at where the continuation formed. The continuation formed down here. So this impulsive wave, it started down here, and then the market went up. It broke structures towards the upside. At some point, it is going to need to correct. It will have to correct at some point. So that's why I'm saying you must be very careful with AUD NZD. And this is why I'm saying that I'm waiting for sells. Personally, I'm looking for sells. You might also do something like this where you say, okay, let me look at a channel. You may also use a channel, something like this, right? You see with the channel, we are approaching the top of the channel. We are approaching the top of the channel. So this is something you might want to be careful of. So we could start to get that correction from anywhere around this zone. So I'm looking for this correction to form, looking for sell opportunities on the correction. So just be careful with this. It's approaching the top of the channel. And we know what happens, right? When price approaches the top, we know what happens. So anticipating one more push down, and then we'll take it from there. So once this wave is done, is complete, one more push down, and then we'll come back and talk about it. All right. So in the meantime, you see now, let me show you something. You see now we've got a rising wedge formation, right? You've got a rising wedge formation. So every time the market makes highs like this, these are potential selling opportunities. Potential selling opportunities until we make a push towards the downside. You see how it is? So yeah, so the market can slowly trickle towards the upside, but you must be aware of where it is, what it's approaching. It's approaching this high, so we could get one more drop from that high. So I would look for this drop. I would look for this drop. Is it gonna form from here? We'll have to wait and see. I would look for this drop. You see how it is? Yeah, so AUD NZD, just be careful on where price is trading at the moment. If you take a look at the MACD is slowly pushing towards the downside. All right. Yeah, so AUD NZD, this is how I would basically approach it. Looking at the current structure, where the market is coming from, where it is right now, this is what I would look for. All right. So that is AUD NZD. All right. So, ladies and gentlemen, any more charts you want me to have a look at, you can type it on the chat. Let's go. You can type it on the chat. What else do you want us to talk about? All right. In fact, let's do this. All right. Let's do this. I'm gonna look at AUD USD. All right. AUD USD is very interesting. What it's doing right now, it is very interesting. So AUD USD, it's approaching the zone, right? It's approaching the zone. We spoke about in our advanced classes, we spoke about price heading back to that zone. So first, we spoke about price going back to the zone first, and then if it breaks the zone, we are going back to that zone. All right. Now looking at where the market is coming from, it's coming from this low, and then that's where we had that aggressive push towards the upside. All right. So now this is where we would take profits now. The setup is done, is complete. This is where we would take profits, right? And then from here, wait to see what the market will do. But since the market did this, since the market broke slightly here, right, we would anticipate price to break this slightly as well, to break this and make its way towards the upside, right? And basically give us a high. So meaning something like this. So We have an impulse wave down, and then we've got this push up, this push down, this push down, and you will notice that this push broke the previous low, and then it did this. All right, so we are looking at this possibility, here, where we have a break down here, and then we're anticipating a break up there as well. You see that this is a popular formation, guys, called an expanding flat formation, right? It's one of the well-known patterns in technical analysis called an expanding flat pattern. All right, so we anticipating price to break this resistance, not to reverse, but to break this resistance, and then to get inside this zone, and then we'll see what's going to happen around that zone. But AUD NZD, more upside is expected here. Okay, there's a question. Can you talk about the pairs that move together? I'm watching Euro USD. So what are the pairs? Okay, you're talking about correlation. All right. So correlation is a concept in trading where there's a relationship between two or more currencies. All right. So that's correlation. So we have inverse correlation and positive correlation, positive and negative correlation. So you look at Euro USD and USD JPY. So there isn't correlation between the two really. Euro USD, USD JPY, there is no direct correlation. But now the reason you would see them moving in the opposite direction is because of the dollar, the USD. But in terms of direct correlation, there's no direct correlation. Now let me take you through some correlation, right? Let me take you through some correlation. And before I do that, Kwase official, I mean, it depends. What I would say, I would encourage you to master price action first, right? I would encourage you to master price action first. And with price action, you will see that it's enough, right? But should you want to add indicators, then it's entirely up to you. But it's important that you master price action and structure first, right? So is it advisable to use indicators? I don't think it's a matter of being advisable or not. It's a matter of how you believe the market moves. All right, but I would really encourage you to master price action first. So let's have a look at correlation before we continue. All right, so when you talk about direct correlation, right, or let's say positive correlation, right, meaning they move in the same direction. So positive correlation, so same direction, right? So we have the following here. We have AUD USD together with NZD USD. So there's positive correlation between these two, right? Let me do this. There's positive correlation between these two, AUD NZD and AUD USD and NZD USD, right? And then you have let me do this. Let me just open up the market watch. Let me see. And then to an extent, right? To an extent, you have Euro USD together with GBP USD. To an extent, right? Not 100%, but there is a bit of positive correlation, but not 100%. So meaning sometimes it might not correlate, all right? But really not 100%, but there is to an extent. And then you've got, in terms of positive correlation, you have okay, we'll come back to positive correlation, right? So let's go to negative correlation. So negative correlation, different direction. There we go. Now this one, there's plenty. Number one, gold and USD JPY. Gold and USD JPY, different direction, right? Opposite direction. let me say opposite direction. Right. You've got gold and USD JPY opposite direction. Right. You also have Euro USD and USD Swiss opposite direction. You also have let me see, let me try and remember. You also have GBP USD as well as Euro GBP. GBP USD as well as Euro GBP opposite direction. All right. Sometimes they are gonna lag. So you need to understand that sometimes they will lag a little bit. It doesn't mean that they're gonna move in the same direction at the same time. Okay. Sometimes they're gonna lag. You also have Euro USD and Euro JPY, but not 100%. All right. Not 100%. So you also have this situation here, not 100%. And then you have these ones like your Euro NZD, Euro AUD, right? Same direction, GBP NZD, GBP AUD, right? And then you have these ones. But yeah, so what I would say is in terms of negative correlation, we've got this USD JPY. Okay, yeah, no. Okay, and then the last one here would be AUD JPY and NZD JPY. Right. So in terms of positive correlation, you've got this, and negative correlation, you've got this. So yeah, so keep an eye on that. Keep an eye on that. Keep an eye on that. Think this is Euro JPY. Euro JPY. You want me to have a look at Euro JPY? Let's have a look at Euro JPY. It fell aggressively. All right. It fell aggressively, Euro JPY. Euro JPY is not really a nice setup. All right. It's not really a nice setup because now, let me just go to the monthly. Yeah, it's not really a nice setup because now it has broken these tops, right? This top is broken. We can see this top is broken. This top is broken as well. You see that? And these are extreme tops. So it seems like we have reached an area of exhaustion on Euro JPY, an area of exhaustion. So you can see what happened in the past. Broke the top and the market fell. All right. So now we have broken another top. So there could be a bit of exhaustion that could take place here, right, in a form of a correction. So this entire move towards the upside, it could be extended and we could start to see a push towards the downside. Okay. So we have to be a little bit careful with this one here. We have to be a little bit careful with this one. So it's not really a good setup. So where it is right now, if you look at the weekly time frame, the weekly time frame, it's struggling here. Right? Look at this. Right? It's really struggling to continue pushing up. To continue pushing up. And then this week's candle, obviously this aggressive candle. This aggressive candle. All right. So we need to be a little bit careful with that, right? But from a shorter term point of view, short-term point of view, price just broke the structure. So there could be a slight push towards the upside, right? Looking at where the market is coming from, it has broken this low. So looking for one more push up, and then we'll see with this push, we'll see then if it's going to continue going down or if it's going to continue price towards the upside. But I would anticipate one more push up with the current price, right? One more push up, right? One more, maybe back to, yeah, back to the 50 maybe. Back to the 50 maybe, the 50 of the Fibonacci. Yeah, so Euro JPY, this is how I would approach Euro JPY. It fell aggressively, yes. From there, I would anticipate bullish price action. and then we're gonna sit and wait to see what's gonna happen there. What's gonna happen there? You see that? So Euro JPY, this is how it's looking this afternoon. I think it's similar to what GBP JPY is doing as well. If you go to GBP JPY, right, GBP JPY also gave us that strong reaction towards the downside. All right, so it broke this low. It broke this low, right? So obviously we've got new structure that is forming, but before price does anything, I would anticipate price to make a slight push towards the upside. There is a lower low, so a retracement, a correction is what I would anticipate. All right, and then from that correction, I would then wait and see what's going to happen. Wait and see what's going to happen there. So one more push towards the upside. So let's have a look at the FIB. Yeah, the FIB up until that 50. Up until that 50. Up until that 50. Yeah, definitely. Definitely. So that is how I would approach Euro JPY as well as GBP JPY. All right. Cool stuff. Cool stuff. Cool stuff. Cool stuff. Cool stuff. Let's have a look at the chat. Did mean price exchange? Kwasi, I'm not sure if I understand what you said there. What do you mean price exchange? Right? What do you mean price exchange? Let's have a look at more setups in the meantime. Yeah, definitely. NZD USD. NZD USD, we already spoke about this one, right? It's going back to this high. Just an update on this one. We've already done analysis on this session, but the previous one. So this one, we know it's going back to this high, right? So this current bullish move towards the upside is not done as yet. It's incomplete, right? It's incomplete. So we have already completed the correction. We have broken out of this, right? We've broken out of this, and then from there we are pushing up. You see how it is? So where it is right now, it is reacting from the zone here, right? It's reacting from the zone. That's why we are getting some ugly price action here. There's a consolidation that's forming because of that zone, but seems like we're breaking above, right? So a break above this is going to take us back to that high. To that high there. So that is NZD USD, right? So AUD USD and NZD USD, they are both bullish. Both of them are bullish, right? If you also add Euro USD in the mix, definitely. But remember, guys, right? Tomorrow the CPI, US CPI, so it could change the direction. So we'll talk about the changes if and when they happen. But yeah, could change the direction. I was looking about price exchange. Yeah, no. What I mean is, by price action, right? I'm talking about learn to read and predict and forecast market movements, future market movements, using price action. All right. So by price action, I'm talking about. Let me do this. Right. I'm talking about a naked chart. Right. A chart without any indicators. Right. Learn the patterns. Learn market structure. So this is what price action is. Price action is basically market structure, price formations, price patterns, you know, price formations, price patterns, price patterns, key levels, Fibonacci. This is what pure price action is, and also include Fibonacci in the mix. Yeah, include Fibonacci in the mix. Before you even add any indicators, it's important that you learn how to read, interpret, and use this to forecast future price action, right? To make your speculation, your prediction. And once you've mastered this and learning to use not all of them, but combining them, learning to combine them, then you can then look at indicators afterwards, right? Because this is going to build a solid foundation for you, a very strong foundation, because price is cyclical, right? Price repeats itself. So this is what you need to understand. And I'm going to make it very bold, right? Very, very, very bold. Price repeats itself or its movements. Now watch this. Price repeats its movements, right? Price repeats its movements. So this is going to give you a solid foundation for you to be able to interpret price and to understand that whatever you see price doing right now, it's something that happens over and over and over again. So you see NZD USD where it is right now. Let me just zoom in. You see this formation here. It's not new. It happened also here. It happened also here. So let me show you. Let me do this. So the reason why price went up here is because of this price formation, right? Which is a pattern. Now, before that happened, price went up, right? And the reason why price went up from here is because of the very same reason. There was a price formation. There was a price formation. You see that? I'm not saying this is the only reason price would go up, but we can see we've got the same patterns that gave you the same movement. And these movements are consistent. All right. So going back to my point, price action, this is what price action is. Using raw price movements, market structure, formations, key levels, Fibonacci, for you to learn how to read the markets. But the number one thing that you should understand is that price repeats its movements. Price repeats its movements. So yeah, so quasi-official, that's what I mean. Quasi-official, that's what I mean. Does it make sense, Quasi? Maybe let me know in the chat if it makes sense. What time will you engage us about the CPI? The CPI is tomorrow. The CPI report comes out tomorrow well, our session starts at 3 p.m. All right, yeah. So it's on the chat right now. So look at the chat. CPI tomorrow, 13th of February at 3 p.m. So yeah, we are gonna go live. Friday the 13th. Haha. Hey now. Okay. Are we gonna get some scary figures? Let's see. Yeah, so definitely, so this is gonna build a solid foundation, right? It's gonna build a solid foundation, and then from there, then you can, if you want to look at concepts, because there are different theories, right? There are different theories like your ICT, your SMC, your wave patterns, your harmonic price patterns, your Elliott wave patterns. There are different theories. So all those theories are built on top of this. Build on top of this, right? So if you master this, then you can learn a theory, right? A methodology, basically a methodology. Then you'll see how simple it becomes. See how simple it becomes. Great stuff. Great stuff. Great stuff. So ladies and gentlemen, I think tomorrow we're going to talk more about obviously the CPI tomorrow. We do have another trading room tomorrow at 3 p.m. Not 2, but 3 p.m. We're going to talk about more. We're going to talk more of these things, right? So we looked at the dollar. The dollar might slightly change depending on the report. So we're going to talk more about the CPI report tomorrow. All right. Don't miss out at 3 p.m. live on YouTube. So for today's session, we've gone through some setups, some quality setups for you guys. have a look at those setups, follow those setups, and we'll catch you guys back again on the next one. Right? Remember, we do this every Tuesdays and Thursdays at 2 p.m. So do join us again Tuesday at 2 p.m. but tomorrow at 3 p.m. as well. So yeah. So guys, I think that's it for today. Right? We've gone over the charts that you requested. Let us enjoy the afternoon. Have a good one. Relax, take it easy, and we'll catch you guys back again tomorrow at 3 p.m. Thank you for joining us. Please subscribe, and we'll catch you guys again tomorrow. Cheers, guys.